Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me, Shell D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. But before that, let's have a quick look what the markets are up to. So Shell, yet again a record high level coming in for Nifty 50 and what a stellar listing for Bajaj Housing Finance IPO. And what's looking interesting to you, Shell?
Absolutely. A very good morning to you, Shrishti. If you look at markets, yes, we've hit a fresh record high level once again on an intraday trading basis. Definitely the stock of the day has to be that bumper listing that Bajaj Housing Finance actually witnessed on the bourses. The stock actually saw a jump of about 120% at listing. It went higher by about 130%, now settling around 124% gains coming in for Bajaj Housing Finance. This is post their listing. But let's take a look at what the markets are doing and what's the advanced decline ratio throwing up right now. Because if you look at the advanced decline ratio for now, it's actually neck to neck. When you talk about the list of gainers and the losers, the markets are tad bit off the day's highest point. Nifty Bank is seeing marginal outperformance when you compare it to the benchmark indices. Let's take a look at what exactly the broader markets are doing, because they've also come off the day's highest point, be it the mid cap index or the small cap index. In fact, the small cap index at the day's lowest point in the negative territory as we speak. Talking about the list of gainers, then you have M&M, NTPC, Bharti Airtel, Shriram Finance among the list of gainers. Add to that list as well as Power Grid that is seeing good gains, while on the flip side is Bajaj Finance. Top loser on the Nifty, down about 2.8%, followed by Bajaj Finserv, down by about 2.5%. HUL, SBI Life as well as Tata Motors are the other set of losers. Talking about the sectoral indices, then you have the FMCG index that's taking a bit easy today. We will talk in a short while from now what exactly is happening in the FMCG space with Somit. But you also have the PSU sector that's seeing a downtick. But on the flip side is media, energy and metals that are holding on to gains. But like I mentioned, Srishti, all eyes on the FMCG sector and what exactly is happening in that space.
Well, certainly, Cheryl, and that's what we're going to put the spotlight on in the Buy Now, Sell Now lens today, because the latest updates coming in from the FMCG space, but how is it impacting the whole space? Because there has been some changes in the custom duty, there has been some hikes. So let's understand all of that in detail, and Samit is standing by with the list of stocks that may get impacted because of these changes. Samit, over to you.
Well, the government of India has increased the custom duty on crude soybean, sunflower oil, palm oil from 0 to 20 odd %, and on refined oil the custom duty has been increased from 12.5 to 32.5% with effect from 14th of September. Now with this changes, the effective tax rate on crude oils stands at around 27.5% as against 5.5% earlier, and on refined oil it has been increased to around 37.5% versus 13.75% earlier rate that was. Now earlier the rates were reduced back in May 2022 to protect the consumers from the rising global commodity prices, and the reversal aims to address the issue where the domestic farmers are seeing continuous decline in the prices in the Indian market. Now India relies on palm oil imports to meet its 70% of the requirement. In first half, if you see, the palm oil imports increased by nearly 30 odd %, while the imports of this oil seeds increased by nearly 55% on a YOY basis. Now which are the categories that would get most impacted because of this? Now if you look at refined palm oil and specialty fats are the key raw materials for biscuit, noodles, snacks, chocolates, cakes, and crude palm oil and derivatives like palm oil fatty acids are used in soaps, laundry detergents, shampoos and cosmetics as well. So which are the companies that get most impacted because of this? Well, it's Britannia and Nestle, which have nearly 15 to 20% and 10 to 15% of the raw material cost which gets impacted because of this increase in custom duty, while for Godrej Consumer, Jyoti Labs and Hindustan Unilever, nearly 18 to 20% of the raw material basket prices are linked to this, which could get increased because of this increase in custom duties. Now companies would require to take a price hike to offset the impact, unless are expecting an impact on the gross margins of nearly 2 to 3%. So companies will need to take a price hike in similar range if they want to offset the impact. So these are broadly the companies that get most impacted because of these changes in the custom duties.
All right, thank you so much for that. Actually, Somit, for outlining what it means for these FMCG companies, especially the custom duties changes that have come in for the oil segment. But let's put the question then to our experts to understand what should you do if you have an exposure in this particular segment, or if you want to take an exposure, then how this particular development will impact your strategy. We have Gaurang Shah who's joining us on the fundamentals. Gaurang Shah is joining us from GeoD Financial Services, while on the technicals we have Dhwani Patel, who's the founder of Finversify, who's joining us on the show. A very good morning to both of you. Thank you so much for joining us on ET9. And Gaurang, been a while, but what's been your take coming in on FMCG? Has it still been the same?
Well, thank you so much, Shah, for having me on the show, and morning to all of you all. Yes, it's been indeed a long time. Good to see you all again on the show. So as a brokerage house, Cheryl, we have been positive on the FMCG pack. And there are a couple of reasons why we have been positive, and we continue to remain positive. I definitely agree with what your colleague was just reporting about hike in duties with respect to certain oils that we import. But way back in 2022, the levels were different as far as pricing is concerned, and currently the levels are very different. So possibly government needed to rectify that. Having said that, India is, and India will always remain a consumption-driven story. A large part of this support for consumption comes in from semi-urban and rural India. With good monsoons and a better productivity in terms of agri-crop, the income levels are going to improve to the next level. Along with that, you have the direct cash transfer benefits, which mitigates the slippages that used to happen earlier. Lower commodity prices, other than the input cost as far as certain oils are concerned, is one of the triggers that are positive in terms of top line and improvement in profit margin. Starting with HUL, ITC, Tata Consumer, Godrej Consumer, Dabur, Marico, Nestle, Britannia, we remain positive. And I think the support is going to be stable as far as metros, tier 2, tier 3 cities are concerned. But the great driving force for the earnings improvement is going to be from semi-urban and rural India. And I think whenever these kind of adjustments takes place in terms of duty hikes, the companies don't take the entire shock on themselves. They pass it on, some of it or a large part of it, to the end consumers like you and me.
Right, so that's the fundamental take coming in on the whole FMCG space, and Gaurang also shared some of the stocks that he likes at this point in time. But Dhwani, coming to you, a very good morning first of all, and what's your take coming in on the whole sector? Because we have seen the sector moving up on a positional basis, but given the news flow, there's indeed some negative reaction on a select counters. But at this point, any stock that stand out for you, as well as any stock where you would like to share your view, either buy or sell at this price point?
A very good morning to everyone, first of all. And talking about the entire FMCG pack as a whole, definitely the FMCG index has been seeing an upward rise. We are seeing that the momentum on the longer term charts is on the positive side over here. And specifically for me, the interesting part is the weekly charts over here. It's a parabolic rise that we see into this sector coming in at every point in time. From a technical point of view, also certain indicators that we note for are the momentum indicators, where it's indicating that the moment is on the positive side. ADX especially is rising from the bottom on the higher side. So definitely, yes, there are chances of putting your bets onto this particular sector right now, and certain positions must be made. Stock specific action, if you're talking about, I do see certain names which are on the radar for me right now. First of all, Marico is the one where I am eyeing on a breakout over here. The stock is nearing a breakout above its previous swing highs on the daily chart. So yes, Marico is also one of the stock that one should look out for. The breakout is almost over here at 700 levels, and once we get a breakout from those levels, we'll be seeing a upward tick coming in this particular counter of about 100 points from the same level. So 800 is what we should be watching out for next, and the stop loss on the lower side that one must maintain for these the position is going to be of 650. So it's a 50-point stop loss, 1:2 risk reward that falls into this counter. Then the next one that I'm eyeing over here is Dabur. Dabur also is nearing a breakout point where any movement that is there above 670 that is sustaining, we'll be seeing a short-term trade coming in over here first for a target of 700. Given 700 holds out, you can trail your stop loss and hold on into this counter. Stop loss that one needs to maintain currently for the position is going to be of 649.
All right, so that's the take coming in on the FMCG space. On that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking our queries, viewers, to our experts, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us live on the WhatsApp number that's flashing on your screen. Each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity, as well as the time horizon. And that way, our experts will be able to help you better. But talking about our experts today, we have Gaurang Shah to help you on the fundamentals, while on the technicals, we have Dhwani Patel, who's joined us on the show. So let's get started with all the queries that have already been pouring in. And this first query that I have is coming in from Puneet. He's writing to us from Gurgaon. He has a slew of stocks that he wanted opinion on. But let me take two of those. 300 shares of RCF at a price of 200, Dhwani, and about 150 shares of GSFC at a price of around 249. He wants to know whether he should add some more at lower levels to average out, or should he actually stay put with whatever he has. His time horizon is 3 months.
In my suggestion, I think he should stay put. There is no point averaging in these two counters for the current levels. Talking about RCF, the level specifically that he needs to hold out for is going to be of 180. Given 180 breaks on the lower side, we'll see further supply coming in on this particular counter. So that is the stop loss that one has to maintain on that one. And talking about GNFC over here, again, the stock is in a sideways trend over here, and definitely the support is there around 638 to 640 levels. But then that is the stop loss that one has to hold on for. And given that breaks on the lower side, we'll see further supply coming in, and the stock can slip down to 600 levels as well. So that's the stop suggested in GNFC there.
GNFC. I wanted a view on GSFC.
Okay.
Gujarat State Fertilizer. The buy price for that is 249.
All right. Talking about GSFC, also the view remains the same over here because the counters are seeing a certain sell-off pressure that is there from the higher levels, and currently the support levels are definitely there. For GSFC, the support level is around 210 levels. Given 210 is holding out, we can expect a certain bounce coming in, but break below 210 level will lead the price fall to about 185 levels as well over in this counter. And with any bounce, in my suggestion, in GSFC, the exit should be done at cost because it would not hold. We do see a supply coming in at 245 levels as well.
All right, that's the take coming in on both of these names. So moving on to the next query, and Gaurang, coming to you for this one. This query is from Bharatwaj from Coimbatore, and he wants to know, can he go ahead and buy Varun Beverages at current market price? He's looking to hold the same for the next 2 to 3 years. Gaurang, if you can unmute and share your take, please.
Over.
Okay.
My sincere apologies, Cheryl. I didn't know I had gone on mute. Apologies for that. So we had coverage on, I beg your pardon. So we had coverage on Varun Beverages a while back. And with our target price in place, I think we have removed the coverage. Currently, we don't have one. But let me say this, I think the company is totally dependent on what we spoke about at the beginning of the show, that is FMCG. It helps cater to bottling of beverages to one of the top-notch international brands. And we expect the demand for those beverages to continue to go on for a pretty long period of time. I don't know why this correction is there. There might be some corporate development. That is why we are seeing this correction or adjustment on Varun Beverages. But it looks like on earnings visibility and growth trajectory, the company is well placed, and there is no peer comparison that at least I can think of in terms of listed entity.
All right, so that's the take coming in on Varun Beverages. Also, apart from the other counters that we had asked Gaurang, but Gaurang, one big query that's coming in on is Bajaj Housing Finance. You have a viewer, Ranjan, who's one of those lucky persons who's got one lot of Bajaj Housing Finance. What's the medium to long-term outlook on this one? Have you been able to study the financials of this one? Bumper listing, making healthy, handsome profits, whatever adjective you want to use for this one, but what's your take now?
I guess with the kind of interest that it showed, Cheryl, I think it's been one of the best performing IPOs that hit the market. And more importantly, Cheryl, I think I'm quite pleased with the kind of appetite that is there for primary markets with respect to quality of paper, quality of business, with respect to credibility of management, and more importantly, how does the financial advisors advise the company in terms of valuation? We have seen quite a few listings attract a lot of interest, and the subscription has gone to multiple folds. So I was listening into the management of Bajaj Housing Finance before the IPO hit the street. I'm quite well convinced with the kind of growth trajectory that they are talking about. Though there are a lot of listed and unlisted players in this particular housing finance sector, HFC sector that we normally call it. And equally is the growth potential with respect to real estate sector doing well. And more importantly, Cheryl, I think if the inflation is going to stay closer to 4 or sub 4 for a couple of months, then possibility is that by this year end, December 24 or early part of 25, that is Jan, Feb, March, we might see the first step towards rate cuts from recommendation of Monetary Policy Committee and announcement by Reserve Bank of India Governor. So this all augurs extremely well. I can't speak about listing gains because I'm not capable of talking about that. But it looks to be a company which comes from a very good pedigree and is into a growing business wherein one can expect at least 15 to 20% growth in terms of earnings.
That's the take coming in on Bajaj Housing Finance. Moving on to the next query. And Dhwani, I'm coming to you for this one because Rajashekhar is holding two stocks. One of them is Vodafone Idea. He's holding 3,500 shares and his buy price is close to 16.5 rupees. And we have seen the week back was not that great for the company, for the stock price rather. What's your take on this one, Dhwani? And the other stock he has is Texmaco Rail. He's holding 350 shares and his buy price is 200 rupees. We have seen this stock too coming off from his highs, but he's still at some mild profits in this one. What to do in both of these names, Dhwani?
First of all, talking about idea over here, in my suggestion, it's clearly an exit at the current levels because the stock has given a breakdown. The structure is on the bearish side now. And given that we break the 13 rupee mark over here, also we'll see further fall coming in this particular counter, and that could go on till about 11 rupees from the current levels as well. So I understand that there's a loss that one has to book in over here, but it's suggested that you exit at the current levels rather than facing furthermore losses over here. And talking about Texmaco Rail as well over here in this particular counter as well, the bearish side structure is visible on the short-term basis over here. So if you're looking for a horizon of about 3 months over here, I don't see any respite coming in. So with whatever the minor profits that you're making, it's suggested to exit out of this one as well.
This one is coming from Venkata Rao, writing to us from Visakhapatnam. He's a long-term investor. Gaurang, he wants to know about BEML. Should he look at the stock right now? Does it make sense to invest in this one for the longer term? And would you be able to give any safe entry price by any chance?
Giving an entry price, I think Dhwani is more capable of doing that, to be very honest. But I can give you a view on the sector, on the defense overall. So we strongly believe that defense is a particular sector wherein the growth story is going to stay here for at least another 3 to 5 years or maybe more, given the kind of order intake that these companies have already got. and the possibility of the more domestic orders coming through, and more importantly, export markets opening up as a big opportunity for names like BML, Mazgaon Docks, Cochin Shipyard, Hindustan Aeronautics or Bharat Dynamics, nor a garden ship, shipbuilders. So my advice is that this sector looks very, very promising. With the kind of run up that we've seen in the last maybe about year or two, we have seen returns of maybe 50, 100, 150, 200% or even more. And then there's been a little bit of consolidation or profit booking, whatever you want to call it. Don't look at this sector from a 3 months, 6 months, or a 1 year time frame. Look at this sector as a multi-year growth story, and your time horizon needs to be 3 to 5 years, because it takes a longish time period to complete these complex orders, which are high technology oriented and very sharp precision oriented. So the sector looks extremely promising, and all these companies are going to get benefited with respect to orders coming through locally as well as globally.
Moving on to the next query, and Dhwani, the next query is coming from Gargi from West Bengal, and she wants a technical view on GSPM. Just a while back, on the back of the news flow, we have seen the stock zooming in trade, but the momentum has fizzled out a bit. But does it merit a short to medium term investment at these levels? What's your take on this, Dhwani?
In my suggestion, this was more of a trade, news-based trade that one would have taken over here, and turning that news-based trade into an investment idea is not a good decision. In my suggestion, in the short-term basis on the daily charts, we've seen that the stock is definitely taking a certain dip over here. If she wants to still hold on to it, I would suggest that on the lower side, maintain a stop loss of 400. Given that 400 breaks down on the lower side, a further fall in this particular counter can be expected. And in the past, we have seen that the stock has always been testing its 50 period EMA, which stands somewhere around 370 levels. So that would be the level that would be tested again. So 400 strictly as a stop loss in case if she still wants to hold on. Otherwise, the wise decision would be to take an exit.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of your stock-related query, viewers, so don't go anywhere.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries there. And we do have Dhwani as well as Gaurang with us to guide you better. And for the next query, Gaurang, let me come to you, because this one is coming from Dr. Parvez Zafar from Abu Dhabi, and he wants your opinion on Affle India. He has bought 200 shares at an average price of 1126 rupees, and he's been holding this since September 2021. Indeed a long-term investor, but what's your take on this one, Gaurang? Good to hold on?
Well, again, unfortunately, Srishti, we don't have a direct coverage on this one. But I believe that the sector is quite well placed in terms of growth opportunity. And in terms of whatever numbers we saw reported by Affle India, I think that's also gone down pretty well. He looks to be like a long-term investor and has entered the stock at a reasonably decent level. My request would be that just keep the earnings and track the investment accordingly. I won't be able to give a direct buy, sell and hold because we don't have coverage currently on Affle India, Srishti.
Right, then coming back to you once again, Gaurang, this one is coming from Bisaka, who wants to know about a few companies. Actually, she's a housewife and she has long-term vision. She's saying that she wants to invest in companies for the next 2 to 3 years. She wants to know, would it be advisable to look at Credit Access Grameen or, for the matter of fact, APL Apollo Tubes for the long terms at current levels? What's your take coming in on both of them? Fundamentally, you think they are good companies to go ahead and look at right now?
So, firstly, on Credit Access Grameen, well, we do have a positive coverage with targets somewhere close to about 1550 to 1600. I'm talking this on the fundamental side. So, mind you need to have a longish time horizon in case if you decide to get invested. And my humble request is, I believe she's quite new and a beginner to the investment in equity market. So, just word or two of advice for investment long term. Don't put all your money at one time. long term means 12, 16, 18 months plus, so that you can get a decent return from your investment. Ask questions before you invest so that you can take a prudent decision and act accordingly. The second question was on APL Apollo. Unfortunately, I mean, this one also we don't have direct coverage. But my advice would be that there is another company which is into, there are two more companies that we are positive. One is Astral Limited and Prince Pipes and Fittings. I think either of these can be looked at from a long-term investment idea.
All right. The next query that I have is coming in from Gautam. And Dhwani, if you can share your take on Adani Ports and advise him also, because he's already holding 500 shares. His buy price is 1457 rupees. At this price point, should he sell his stock and rather buy Adani Power at this point, or any other stock that you would like to suggest him or recommend him?
Talking about Adani Ports, first of all, the stock has not been making any movement. Actually, it's into a range that we are seeing it from quite some time over here. On daily structure as well, for short-term basis, there is a bearish trend that I see over here. Anywhere the stock will slip down to test its 1400 levels back again. Whereas talking about Adani Power, we are definitely seeing an upward surge in this particular counter from the current levels. The bottom is made somewhere around 620 levels, from where we are seeing a uptick coming in on this one, and the switchover would be advisable. It's a wise decision over here to take. Given the advice, the levels for Adani Power on the higher side, you would expect 720 as one of the first targets, and post that you can see an upward rise coming in till 740 levels as well. And the stop loss that you need to maintain on the lower side in this counter is going to be of 645. The stock is also given a breakout after making a bottom formation around the same level. So 645 is an ideal stop loss that one can maintain for a target on the higher side of 740.
Let's take this next query. Actually, it's coming in from our viewer. This one is coming in from Amit Murkute. He's writing to us from Mumbai. He wants to know about CDSL. He's saying that he's buying CDSL now on correction today, or should he look to go ahead and wait for some more dip to come in this counter, Dhwani? Also, he wants to know what sort of a target should he eye out for the next 1 year or so. Is it good and advisable to go ahead and buy CDSL right now, or should he wait for some more time? And if you advise that he should go ahead and buy, then what sort of a time horizon should he keep in mind and target?
No, absolutely. This is the right time to enter into CDSL. If you see it upon a daily structure over here, since last 4 sessions, the stock has made a bottom around 1350 levels. And 1350 levels on technical front also is a point of polarity. Earlier, it was acting as a resistance, which is now acting as a support level over here. Plus, the 50 period EMA also over here on the lower side is acting as a support since last 5 sessions. So yes, it's a good time to enter into this counter. On the higher side, he can expect a target on the short-term basis for about a month to month and a half of 1590, and the stop loss he needs to maintain on the lower side is going to be of 1350 over here.
All right, moving on to the next query, and this one is coming in from Vinod, and Gaurang, he wants your advice for fresh investment, and for now he is eyeing at 3 counters and confused which one to go with. Poonawalla FinCorp, Geo Finance as well as Tata Tech are some of the stocks that he wants your advice on. He's looking to invest for the next 3 to 4 years. So Gaurang, what's your advice? Any stock you like amongst these 3?
Well, so sorry, the first one was Poonawalla FinCorp, second one was Geo Finance, and the third one, can you please repeat?
Yes, the third one was Tata Tech.
Yeah, so on Geo Finance and Tata Tech, we covered Tata Tech for the IPO. The floor on the higher side for Tata Tech was about 585, if I'm not mistaken. Stock made a high of 1400 post listing and now consolidating at about 1050 to 1100. So keeping that IPO note as a base, you can definitely look at Tata Tech. He's got, I believe, 3 to 5 years of time horizon. Please go ahead and invest. Geo Finance, well, we have a positive coverage with target price of somewhere close to about 414 or 15. On Poonawalla FinCorp, I would say that instead of Poonawalla FinCorp, Look at Bajaj Housing Finance, the stock that got listed today, but not today. I mean, once you get the listing players coming in and wanting to book profits and the stock corrects a little bit, I think you should possibly look at that. Or else, I would also suggest a diversified small cap microfinance company called AU Small Finance. I think AU Small Finance at about 760 or 750 odd levels. Look at AU Small Finance from a long-term point of view.
All right. Let me take this next query then, and this one is coming in for OSN Reddy. He's writing to us from Hyderabad. This one also is for you actually, Gaurang. He's holding 132 shares of Laurus Labs with a profit of about 20% in this counter. He wants to know whether he should look to exit from Laurus and look to buy Dr Reddys instead, which is available right now at a reasonable PE. What's your take?
Well, so I think a shift would make a sense. We have fundamental coverage on Dr. Reddys from a long-term point of view. And I think of late, getting approvals from US FDA has augured well. Unfortunately, we also had certain red flags in terms of Form 483 on a couple of companies, which is a short to medium-term concern. Long-term, if you want to make a shift to Dr. Reddys, I would definitely recommend that.
All right, moving on to the next query. And Dhwani, this one is coming from Mahindra from Mumbai, and his query is, will that be a good idea to start buying Siemens at current levels and keep it for the next 3 to 4 months?
All right, talking about Siemens, ideally, no, it's not a good time to enter into this one. If you're looking up at a horizon of 3 to 4 months over here on the short-term basis, the stock is making a top. Even on the weeklies, we are seeing that the first top was made somewhere around 7,900 levels, and now even 7,000 is becoming a task for this one to cross on the higher side. And in recent past few weeks, even 6,900 to 6,800 is acting out as a resistance. So on the higher side, we are seeing resistances coming in this particular counter. So not a good idea to move into this one.
All right, this one's coming from Naveen from Bangalore. We did speak about Geo Finance a short while ago, but he also has JSW Infra about 260 shares, 100 shares at a price of 260, as well as NTPC 360 is the buy price for the long term. Does it make sense to stay put with both of these counters, Gaurang? What's your take on JSW Infra as well as NTPC?
Well, so answering your second question first, yes, NTPC looks extremely exciting. I think with the kind of new power producing capacities that's going to come up in the next 3 to 5 years. And of course, not to forget, NTPC is one of the largest players as far as capacity is concerned in terms of power generation. We have a positive buy call on NTPC. JSW Infra, well, this one is a very niche player in the ports and logistic handling. Has got a huge operation in the Middle East, and this company we had covered during the IPO. Post the IPO, we've seen a decent upside, but I think the recent acquisition of port down south has augured extremely well for JSW Infra. Once again, keeping that IPO note as a base, I would say if you invested, hold on to it. If not, you can look at opportunities to accumulate the stock at lower levels.
Right, that's the take coming in on JSW Infra. But with this, it's time once again to slip into a very short break. Viewers, don't go anywhere. We'll be right back and we will take more of your stock-related queries.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Let's continue taking all of your queries. We have our experts, Gaurang Shah on the fundamentals, Dhwani Patel on the technicals. So let me take this next query that I have, and this one is coming in from Subrata Mukherjee. Wants to know about Coal India for the long term on a fundamental basis. Gaurang, I'm not sure if our viewer, okay, he's saying he wants to buy Coal India, which means that it's a fresh entry coming in for this counter. What's your take for the long term? Do you think now is the right price to go ahead and buy Coal India?
So, again, Cheryl, pricing and timing is something that I fail miserably. So I stopped doing that. But yeah, on Coal India, we have a long-term buy call. We were quite excited to see the output increase along with the quality and quantity of coal that Coal India mines. 600 levels from a long-term point of view cannot be ruled out. Whether to buy all out or whether to go in a disciplined manner, staggered investment, I think I would go with the latter. Uh, Always disciplined approach is a very sensible way to invest in stock market. Don't think as if there is no tomorrow. There will be tomorrow, there will be day after also. So start at current levels, maybe 25-30% of whatever you want to invest. And whenever you get corrections on dips, you can go on adding it.
All right, moving on to the next query. And Dhwani, I'm coming to you for this one because two of our viewers have asked the query on BEL. First one coming in from Venu. Bought 500 shares of BEL at a price of 305 rupees, and even Professor Chalam is also holding BEL from a price of 307 rupees, but he's having 2250 shares. What's your take on BEL, Dhwani? Good to hold on, or maybe look out for an exit at this price point?
So in my opinion, Shrishti, when I'm looking up at a daily structure over here, the structure has definitely seen multiple amounts of resistances on the higher side from 340, then again at 325, and now in the past few weeks, we are seeing a resistance coming around 310 levels as well. So resistances on the higher side are, coming into picture, and whereas on the lower side, the support right now that the stock is showing is of 275. In my suggestion, it's an exit that one needs to take from the current levels in this particular counter, looking at a very short-term view over here, where the stock would slip into trade, and given 275, breaks in this one, we'll be seeing a further fall coming until 240 levels as well, which is its 200 period DMA over here. So it's a sell coming in on BL from the current levels.
All right. This next query that I have is coming in from Kalyan, who's writing to us from Chennai, and he wants to know about Nalco, whether he can buy at present price or no. So let me, since it is a query on whether to buy at current price or no, let me come to you, Dhwani. Then what's your take coming in on Nalco? Do you think this price is a fair price to go ahead and buy this one?
Technically, yes, it's a good price to enter into this one, as the stock is seeing a bottom formation that it's taking around 165 levels to 167 levels, where we are seeing that in the past two swing lows, these levels have not been broken, and on the higher side, it's nearing a breakout level. So it's a conditional buy, given that in today's session, the stock closes above 185 to 186 levels. It's a buy coming in on this one, and on the higher side, the target that can be expected is going to be of 201 to 208 levels. And the stop loss ideally for this position that needs to be maintained is going to be of 178.
All right, the next query that I have is coming in on KPIT Tech. And Gaurang, this query is from Jay from Mumbai and wants a long-term view on KPIT Technologies. He's already holding actually more than 200 shares. His buy price is 1764 rupees. But can he go ahead and buy more even at current market price?
So, Shrishti, yeah, prudent. I think I should give a disclosure. We have a positive coverage, 2200 plus. Is it KFin Tech or KPIT Tech? I'm confused.
That's KPIT Tech from the IT space.
Okay. Yeah. Thanks, Shrishti. So we have a positive buy call on KPIT Tech. Targets are somewhere 2200 plus. I think this is one small to mid cap company in the IT universe which has reported stellar set of numbers, even if you have to compare it with some of the leading mid cap or large cap IT companies. And this one, KPIT Tech, Shrishti, has been a consistent performer when it comes to earnings. And I think the opportunities in terms of technology that it has for EV vehicle platform is going to augur extremely well in terms of business opportunity. So if you're invested, stay invested. If you're looking at adding more or buying at current levels, I would definitely advise to do that.
All right. This next query is coming in from Prabhu, who has about 400 shares of IDFC First Bank, holding the shares for the last 2 months. Its price is 75 rupees per share. Dhwani, for the next 2 months, how is the stock looking?
So the person has bought it into a consolidated rate. The prices have been hovering around the same levels since the last 2 months. It was July end where the prices entered into this particular territory where the high of 75 to 76 was not being breached, and on the lower side the support is somewhere around 70 to 71 rupees. And in my suggestion, one can hold on to it. It's just a phase that you're facing over here where the stock is consolidated, because in the past we have seen that the same level of 70 has acted out to support, and we have seen bounces coming in from the same levels as well. So hold on to it. On the lower side, keep a stop loss strictly around 71, and on the higher side you can expect that for a period of next 3 to 4 months, given holding out over here, 78 and then 80 is the target that one can expect.
All right, that's the take coming in on IDFC first. But with this, viewers, it's time's up in this edition of Buy Now, Sell Now. Thank you so much, Dhwani, as well as Gaurang, for taking the time out and helping all our viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching, but don't go anywhere. Markets at noon will take the action ahead.
Indian exports are sailing on the wave of growth. Invest in sectors.
If you like this video, then like, share and subscribe to ET Now.